Greetings, market rebels. Welcome to this week's macro measure video, which is combined with sector situation. There it is. It is Sunday, October 13th, 2024, and it's about 20 after 11 a.m. here on the East Coast. I'm Wayne. I'm going to get into things. Here is our trusty disclaimer. Here is our trusty intellectual property rights notice. And then finally, here is our selective review of the prior week. So let me get that old laser pointer. For me, really new laser pointer going. Major aims of our discussion. We're just trying to keep it nuts and bolts. Nothing super complicated, just basic technical analysis, classic technical analysis tools and techniques. Just so it's really easy to follow along, hopefully, and to learn if you're really new, some of the old school stuff that's, if used properly, still very helpful, very reliable. Identifying the market environment is probably the key thing we're after, and we try to arrive at a news neutral assumption, most likely scenario. So if no news impacts, then we want to say, well, this is what we think is most likely to happen in the upcoming week. That way, maybe we're kind of have a somewhat of a lean, but that's really not as important, I think, as identifying the market environment. Anyway, we try to highlight both bearish and bullish risks, and you can probably already tell if you're new. Please go to about 2x and see if you can handle that, because I tend to be very detail oriented, just on a personality fault basis. Anyway, last week we thought that after the prior week, which we thought the market would probably do for a rest, maybe pull back, see if it could convert former resistance into support, which it did, and the bulls defended well. We thought the market would try to move up. We had said that we thought some of those true believer conversion resumption buyers, people that believe the trend is on its way, they could pile in. We said again, which has been happening for months and months and months, to my recollection, it just will take news to derail this market. It's going to take something to derail it because of the technicals, the way that I look at it. Anyway, no news would be worse, because if you can't figure out why the market's getting crushed suddenly, and it's really getting crushed bad, that's often a pretty negative development. So be on guard for that as well. Someone will know, and they'll start selling before any of the rest of us figure out what's really up. Anyway, and they'll be selling heavily. So the market environment, volatile, right? Potentials there in both directions. We said, squeegee, melt, or rug pull. Window of time is upon us when unexpected news most likely to impact, which is really the next 2 months. Really, the balance of the year I would still extend it to, but really the next few months, I think. I think there was a tricky start to the week, but basically the most likely scenario, the MLS, played out by week's end. I think that was pretty straightforward. I think we did highlight the SMH, I believe, last week, and we said that it left what could be a higher low base camp. For folks that have been with us for a long time, they know what that means. And turned out actually that there was a very good week in SMH. It didn't go gangbusters to the upside. In other words, break out through the former high, through really, I think, key resistance, and just go. But it did make a breakout attempt by week's end. It did put in a new high. There's now a higher high. It was able to close above the former recent highs, and it was also able to close above resistance. So I think that was helpful as well. And then this week, we're going to get into all these points, and I'll try to cover them, but I'll try to do it very fast. So I know folks are busy, and I'm extremely busy, and I'm really have a lot of stuff that's going on right now that I still have to address. Anyway, I still have the Spidey sense thing happening. It's starting to tingle a little bit more than it has been this week. Nothing wrong with what I see in terms of how the market acted, which we'll cover. It's just that there's that trader sense. I think if you've been around markets for a while, you start to develop that. And I would say that my intuition or gut, so-called gut, on if I just sit there without charts and try to trade, it was never very good, especially early in my career. But my spidey sense is actually not horrendous. It's not bad. So I would say that something about this recent action to me feels a little bit hollow, seems spooky to me. I'm reminding folks to learn the collar. You may have seen me during one of our webinars this week or whatnot, but I've been trying to, I always tend to preach that and other strategies that you should learn quickly when I feel like there's really downside risk that's not a small thing, basically. So when I think that there's significant downside risk, I really try to implore folks to learn the collar at the very least. The bottom line, though, trend's still up. We had said that consolidation end favors breakout attempt. That's, I think, we're going to stick with that this week because it still does favor that. I think the bulls are clearly in control. My problem is common sense and spidey sense. Those two senses are, I think, what's driving me to be very concerned because I just think there's I've seen the VIX move up in front of elections. I've checked that out, recently, and I've checked that out, before. I don't know if we'll go into it today, but the bottom line is that that typically happens, and this has been elevated, in my opinion, for a while. I would say for the last week or two, we've been elevated. We were elevated before then, and with the VIX really in the low 20s, I don't think that's something that's typically normal, right? When the market is doing as well as it has been. So I think that's sort of a confirmation that we have company. Not that we're necessarily right, but we have company in terms of our worries. And I just feel as though there's really a few diametrically opposed philosophies competing here. And I feel as though there's some real issues that could develop around and leading up to and around this election. It's like something we saw with the Bush Gore situation way back when. So I don't know if it's going to go smoothly, and we're really getting close now. You're only a few weeks away. So I think anytime there could be problems that come from this, that, or the other thing, and you just don't know what they're going to be. So that's why I'm saying remain at DEFCON 1. DEFCON 1 is something we're only really normally at when there's maybe a massive event that we know it well ahead of time, which normally means you don't have to worry too much because it's well known, but not always. The other time is when we're near critical support or there's really deterioration that we see that we don't like, technical deterioration of usually it's various kinds. Anyway, CNN fear greed, that is back to extreme. The seasonality calendar says that we should have had a rough start to October and that we should be finishing better than we started. Well, we started pretty well the first couple of weeks, so the calendar remains off course. The impact, will it come back on? It's kind of like now or never for the calendar. So I think if you're going to start seeing trouble or concern work its way into the market, it could be that there's going to be this attempt to push beyond, right, what we saw at the end of last week. And if that rally attempt just gets short-circuited, could get short-circuited right on Monday morning. But if that rally attempt doesn't follow through, and I think under normal conditions, if we were in just a non-election year, normal times, the market looks quite good to me. We've been saying this, and we can't really find that many problems with the market as we have in the past before major corrections. So I do think there's the rolling complacency out there, though. And all I mean by that is just that there's just been complacency's been in place, and it just keeps rolling from week to week, right? It just doesn't seem to dissipate. I don't think the charts are showing us that there's massive problems. A lot of the stuff that we do week in, week out here in these videos, well, this video that we've been combined now, just due to circumstances, but the sectors in market breadth really were not that bad. I would say that they improved last week. They've been solid overall. It's just been that way. The put call, that's a different story. I feel like that's now back to complacency, despite the fact that the VIX itself remains elevated. And that's part of the reason why we have such an interesting technical mix right now, which I think we'll see. part of that is also the dollar, the TNX, and the VIX being where they are and having moved up so strongly. They are all either moving up strongly or hanging tough as the market moves higher. So this is certainly not the market acting like it normally does. So I think there's something lurking here that's different, and I don't know what that is. I've never claimed to know, and I still don't know. So it's probably there are people that probably know, but I've never been on that team. Anyway, the VIX is again not near the lower teens, and the market is barely off highs or at highs. So again, I would reiterate that we have company, and in terms of diagonals management, that little note right there, I'm sticking with the long VIX spreads. I've got VIX calls, and I've got all kinds of other things, and I will be increasing that this week. But my plan is really with things like the long VIX and long metals and things like that. Is I've been working diagonals, and when things get overdone to the upside, is when I like to sell my upside call to move into a diagonal, and then when things correct, I tend to buy those back and just let the long in the money calls just work for me. So I just wanted to reiterate that again. I will try to remember to cover some EOA, by the way, at the end of this today. The issue I see, though, is a mega issue, NVIDIA issue. We'll look at that, but the bull spin would be that the market's doing it without them. And the bear spin would be something's amiss if the megas are this reluctant. And so there seems to be a missing quotation mark there, because I got to get this taken care of for y'all. Anyway, retrospect, we could look back and say, where are the megas telling us something? Whereas the rest of the market was, in terms of the smaller stocks, just sectors, different things, was it really broadening out, or was it a sign? Well, only time will tell. But you have to ask that question because the megas and NVIDIA are so reluctant right now. And I think you would have punched through the nearby resistance in both in a normal market environment, which I do not believe that we're in. I think you're definitely in a presidential election year market that's acting a little off kilter now, but I think that's because the perception is that there's greater risk than normal. We'll see if that bears out. Again, could just be misinformation. Reminder, global easing, you're getting another Ponzi cycle. It's happening around the world. The US is a part of it now. Kitchen sinks coming out as usual. Every administration does it. So they're trying to make the market look good feelings, good vibes. My intermediate term take, meaning towards the end of this year, right? If you could assume that, again, there's actually a missing, I think, bracket or something I've got there, parentheses or whatever. What did I do? Yeah. Anyway, if you assume that we're going to be in for smooth sailing, like, hey, we're back in, 1976, and the election was just held, and things are just a normal election, and someone wins, someone loses, and life goes on without any of these other issues that we've got out there. Yeah, I think you would just squeeze melt into the end of the year. I think you'd whatever, call it a blow off if you want. I think that's what would happen. So I just want to note that, because if I'm dead wrong about something really dramatic potentially happening, or several things that are dramatic potentially happening in and around this election or near the election or post-election, whatever, that is a problem for the market, if none of that happens, I think this thing's set to just continue to squeeze up. It looks, overall to me, still looks good. However, right, I still think the world's really full with issues, and it just keeps adding to them. That's what I see with my news checks. I would keep due to potential news hits, I would stick with the roll mentality in both directions, and you know why. My most likely scenario for the week would be market tries to move up. I would, not that you wouldn't go with it right away, you would if you believe in it, but I would be wondering, right, if it has the staying power and follow through. If there's no follow through, there's really a problem potentially. So we're getting close to maybe where people are uncertain. The market doesn't like uncertainty around certain events. then this presidential, if the presidential election is very uncertain, that could be a little bit of problematic stuff. And you could see some short-term profit taking, maybe some risk reduction. You could see some hedging, stuff like that go on. Anyway, you already know where I'm at, right? The window of time where I expect there to be unexpected news, supposedly. I still think the risks are dramatically underappreciated right now. That's my take on it. I don't really believe in the soft landing situation. And I don't know how much you can just keep ponziing your way to good numbers, which, forget the fact that a lot of the numbers are cooked and fraudulent. But basically, I would say, in the bottom lines of the corporate accounting that goes on in our US publicly traded companies, there's a lot of this, that, and the other thing in there, not even getting into that, but they do a great job of working that angle. So who knows what they can do, but I just feel like things are not organic and there's a lot of just pretending, and everyone seems to accept it. Well, not everyone, but most people are just okay with I think the pretending. And I don't think you can pretend your way to prosperity, but that's what it seems like we're trying to do. I'm going to leave the rest of it off. So that's that. That's where I'm coming from. Now let's just briefly stop the share. Let me just reposition and we will get to it, because the charts, and I'm going to leave these reminders over here for myself. I'm going to get my charts going here on this screen. Come on. Screen 4. That should do it. So that's it. Yeah. So this was, this is the thing I wanted to start out with, which is SMH. And remember what we talked about with the base camp, right? So here's the base camp. We had said that after this pullback, right, the reason why this failed is because the run, not necessarily the reason why it failed, but one of the reasons that was maybe a contributing factor was because this run was quite long, right, to get there. And when you got there, you were maybe a little bit tired. So there was this pullback, but it found 50 SMA support, 150 SMA support, 20 SMA there in blue. All that sort of confluence zone of SMAs was waiting for it. It springboarded it a little bit, and then we thought, well, this gives it a way better chance of maybe breaking out, coming back over and closing this gap that's been there for months. And if you get the SMH going, that's one of our top watches. So we thought, wow, that would be excellent, right? If we got that happening and you could just extend the rally, and then maybe, right, it's really not out of the question for something like the semis to make a big move towards, not necessarily in 1 week, but to make a big move back towards the highs. And if that really fires, that's very encouraging for many reasons. So that's part of it. But the nice thing about what they did is, yes, the semis had a good week. I mean, every candle there's green. Didn't advance necessarily every day, but they came in and bought. So it does look quite good to me. Bought relative to the open, I should say. I just throw things around and forget that not everybody knows what I'm talking about with my own little thoughts on it. Anyway, yeah, so you have a high close. The close exceeds the former high, and the former closing high takes out this high, takes out this high, right? And then if you look at where you got to, you're right near this high, which would be great, right? If you could get through there, then that really opens the door for this. So it's very close to opening the door for this. So it also came back to, hesitated around there, respected it, resistance, and then kind of opened on there, tested it in the short run, and then went through it. Now, often, as we noted, with the SPY a few weeks ago, just to show this for folks that are new, you had the pullback, you had the initial test of the former resistance area, right, which is very common, which was right here, right after we busted through it. There's very often this little sort of, it seems insignificant at the time, but it's a little sort of retest to convert that. And then you ultimately later get a more significant pullback after there's been an initial burst, and then that holds, and you can often go from there. So that's what we were looking for a couple of weeks ago. And we got that pullback that we were thinking could happen. And then they did use that to launch from again. And you're not really overbought, okay, in SPY. You're at 65. So I do think there's definitely still potential for more follow through here, right? And you could see, and I know a lot of people are not big on these kind of things. I know that there's a backlash against people that like to draw lines, but I don't really care I don't really care because I've used these things to my advantage for a really long time, as simple as they are. You can see here, we're getting towards that resistance line that I just adjusted. And so if you bust through there, then you're on your way towards other potential former resistance support lines coming into play. And I'd have to really go through and chart all that. But notice, right, that this kind of gives you this sort of ascending wedge. And not that that's necessarily bad at the moment, but if these things break, and at this point, you'd probably have to say it would break that line I just made blue that's now purple, which is just about the 20 SMA. If somehow this sort of failed to continue very much and then broke down, that could be pretty devastating. I've seen a lot of ascending wedges just absolutely lead to technical destruction. So I'm not trying to really, this isn't about the scare. It's just about how quickly things can change. I can certainly still believe that if we get through a little bit more here, let's call it 582. You get through 582 and you go. I mean, I think it's quite possible that, again, maybe they keep, I don't care about the election, they whistle past the graveyard for another couple of weeks. I would not be shocked at that, right? To have this thing move up another 4% in front of the election towards 600 on SPY, not even really a full 4, more like 3.5, but you get the idea. That definitely wouldn't shock me. And I think the charts look really good. I mean, I really can't say much in the way of bad things about them right now, which we had some webinars this week, and we had a guest who was making the case that everything looks great. Why are people having a problem with it? And we supported the guest in terms of I mean, I don't have a lot of technical qualms with the market myself, when I look at everything that we do. And I don't have time to show everything. My videos are already too long, according to most people. So, but there's a lot of things I don't cover, but some things that we do that I really don't think that the basic things we look at are showing you major problems technically. But that's why I'm leaning more on trader my spidey sense to tell me that, and all the thinking and research, that Ryan, myself, and Greg, we do on the subject, just from having done this for a long time. So yeah, I think there's easily could be a massive problem technically, but I also think that there's this potential too. And I would, right now, the bulls are in control. I would just continue to go with it cautiously, and knowing, right, that you're in probably a very risky window of time potentially. There's not really time, many times, or should say most times, are just not like this. So while we're here, let's go through, right, the technicals. You're set there. If you really want to get worried, then use the 10-day, right? The 10-day here on spiders is about 572-ish. But the 20-day to me is right under that support line. It's the 20-day, which is pretty widely followed, so just call it 570 about right now. So you'd have to drop nearly 2%, I think, to be in trouble of any kind. There'd probably be a driving reason for that. That's probably where the news would come in. Now let's go through and we'll talk about another winner. I think we had this in Rebel Pit Pro as the idea of the week. We don't often go with this kind of a old school blue chip thing, but after Monday, we picked this to potentially break out or break down. It was a little slow in starting, but then they got their hands on it and it went. So I hope folks did well in that one. But you can see it went right up to a resistance line that we had there from before. So it stopped there. One thing I want to note on this chart, though, and this is why I think another reason you have to be cautious, if you look at these Bollinger Bands, there's my upper band, here's my lower band, and I don't really pay attention to the Bollingers that much in terms of when they're relatively narrow. Now, people do really dial them down for some short-term trading and use a consolidation breakout approach. That's not what I'm talking about here. I'm just talking about general Bollinger Band application. I use the 100 as my spine for the Bollinger Bands. So 100 period average. Anyway, this is now extended beyond 2 standard deviations, and it's got resistance here and it's got resistance here. So only because these bands are now not super wide, but fairly wide, I would put a little more stock in the concern factor here. Not that there's anything really, really wrong with it right now, but you can also note that it's got a 67 RSI reading too. So when you take a breakout trade after something's been running as it has been for four, let's say 4 sessions overall, um, it's already moved up decently, right? From about, I think our breakout was like 421 something, and it's up 800 points. So a couple of percent, but not bad for a short term trade. However, let's put it in perspective. I think it has the potential to keep going, but again, you could easily draw, which I won't, just based on the time issue. You could easily draw another rising wedge here, and another problem would really creep in if you fall below the 20-day. Again, when the 20-day here is at 421.43, so let's call it 421, give it a tiny bit of breathing room. Gets below there, 421 right now, suddenly I'd be concerned. Like, what's going on? What happened to the follow through? Even though I think we're set up to try for a follow through, but it might be one where you have to be just, again, probably even more, I would say even more cautious than usual. Okay, so you're at an all-time high though. How many bones do you really want to pick with that? How much? Again, we keep saying the same thing over and over again, but the market behavior is what we rely on the most of the time, and how we really just decide on what's happening there is through comprehensive, even though it's classical and basic, comprehensive technical analysis, so that we're using multiple approaches, and if they all generally say the same thing, that's it. The weight of the evidence is that technically this market wants to go higher, and we've been saying that most weeks for the longest time, and that's what's continued to happen. It's just it's not like we're doing anything special here. We're just trying to be objective about it. That's all. And that's where the news neutral assumptions also help. If you just get the news out of your mind and say, forget about all that, what does the market look like? I think it does. I think it really helps you a little, at least a little bit. Let's see now. Let's take a look at the Qs. The Qs are interesting, a little more interesting than I think the spiders and diamonds, which are both making new all-time highs. The Qs are just a little reluctant, right? Much like the mega caps, so I guess it shouldn't really be that surprising. A little bit like SMH, despite the good week that it had. Do you have a possible sort of clustered top here that's got a little bit of negative divergence of the slightest hint? Maybe, but I mean, right now, again, that is the glass half empty, whereas all SMAs are effectively upsloping, and they're all pretty much stacked, where the shorties are above the next longest, and so on. So you're above this area, which was a problem, right? 486. The thing would be they've got to have their day in the sun here. They've got to start to shine. Otherwise, right, tech not really rumbling with the market is a problem. This gap here basically is closed. So there's no gap closure factor at that point, right? At this point anymore. All you really have left are, if you could say, well, you've got the highest close, but that's literally like 60 cents away from the highest high. So, you're what, 2% away, roughly speaking. And you have narrow Bollingers here. So it's not like if it ran towards that, it would be really concerning. It could be, just based on the fact that it could be hard to fight through. It could be a double top in retrospect. But again, still sort of has the rising wedge, ascending triangle look to it, right? You could make arguments here, there, everywhere. Depends. It's all in the eye of the beholder anyway. But look, it's got the higher low here, right? Again, this is a little bit of a base camp, much like SMH, held the 20. It's trying to work up, just reluctant, and getting into the mid 60s in. So again, what would I do here? I think you just have to go with the week's high. You break out above there, which you're not far from. You try to go with it. And if you want to, I think on this one, I would be a little different. If you want to get aggressive about it, I would probably draw this line right here. No, thank you. Let me see if it lets me do. I'll probably have to go way back here to get away from all the indicators. So it lets me draw. Boy, oh boy, guys. Now this is where Thinkorswim and my computer just frustrate the living hell out of me. It just sometimes it just gets so damn finicky, and I really wonder why I haven't fully switched to Trading View, because I don't get these problems from that. But anyway, well, I have switched to Trading View, just not fully. Anyway, and that's because there's custom development that has to happen to get all my indicators into PineScript, which I don't have time for. Anyway, yeah, so here you go. You could use that, right? So I would say, look, probably the big level, you may as well use Wednesday's low, which is really the 10-day and the 15-day. And remember, this is one reason why it's so hard to trade counter trend. Unless you have news that really is shifting things, you've got a bunch of SMA support. So even if you shorted right at the 10, right, or whatever, even Friday's low, you're just going to fall right into an SMA that tends to be supportive when you're in an uptrend. But so it's tough. It's tough to trade that way. But I think you'd have to wait and see if this targets, first of all, the figure 500 and then 503 on the upside. And I just think it's set to go that way. Again, that's a news neutral assumption, as I do not know what could really develop right prior to Monday's open. But I think that's ready. It should be ready to go. It's not overbought. They're coming in for it. I do think you have to keep in mind the possible reluctance, though, because of the excuse me. You got to keep in the reluctance to really go potentially as you get close to the election, where folks may want to square up. The old time phrase is just square up in front of it. And that I would expect that that tends to happen on the seasonality, cyclicality charts historically. But so far we haven't seen it. Little mini double bottom here on the 50 both times in IWM. That's a good sign. IWM with the base camp. IWM, probably the squirreliest of all four of the major index ETFs that we chart, which we chart those instead of the underlying indices because folks like to trade these. Obviously, they're easier for folks to trade, and the levels are, clearly designed to correspond with trading these instruments over, say, SPX or whatnot. Anyway, really strong performance there on Friday, at least on a price basis, back above all the SMAs. Your long terms are still in an uptrend. Your shorties to your 50 kind of neutral to uptrendy. But the base camp is important here. This really might let this thing finally do its thing. We've been there many times expecting to get to try to run to there and see what happened, and it has cooperated with us a few times, but never really felt like it was close enough to where it should not be hard to break out. Interestingly, right, this looks a lot closer, but it'll probably not be able to act independently if the other indices are struggling, and they're all closer to being overbought. This is only at 58 on RSI, and if they are overbought, and they'll sort of potentially sour the mood. Another thing that I would note here is you get through the 225, you've got this highest high just under 229, but as we've said many times before, and I will take just a brief moment to do this because I know we're already running on time. But remember, if this opens up, if the 229 opens up, that brings you to possible all-time highs, right? In terms of where your next really important resistance level would be, right about 244 and change, 245, if you look back way back there. And why that's important is because beyond that, there is a lot of potential here. I mean, I think there's just a ton of potential here. I think if you factor inflation in, which I think is between the liquidity, et cetera, the rest of it, you factor in inflation. This thing is so undervalued relative to the other three major index ETFs we've already covered. So I think I think Tom Lee, of course, more famously made a case like this, but at this point, this thing could trade up if there really is. We're really just going into year 3 of a bull market, and we're about to have 3 more years, which is what you typically got in the 20th century. You really think it's just same as it ever was. There's so much potential here. So I would keep this on your radar as a possible, really short term, intermediate term, great trading vehicle if we start to see this thing really break out. You could always have to temper that with, don't forget that false breakouts are a thing too, right? So there's no rest for the trader. You always have to be diligent, be on guard, because if you get complacent, they usually get you, which is why you hear me overly warn about that. I know that I probably overdo that, but I've just seen it happen to too many people, and I learned my own lesson, fortunately, on that a long time ago. But this has been a pretty wild consolidation. You can see it has uptrending hints in it, right? Bullish hints in it. Now we've got this base camp with a double bottom. Really, there's some powerful factors there finally. So just keep that in mind, because I'm not predicting that we have smooth sailing, but if we do have smooth sailing, or the outcome tends to be very bullish, this thing could scream, in my opinion. Now, what's interesting about that is this. This is this is typically not something that would help stocks in general, but certainly not, and I did it again, TNX.CGI. When you see rates really, right, bounce to this extent that they've just screamed back up, right? That's significant, over 10% move really in just 3 to 4 weeks. Just a remarkable move right back up. That is certainly not helpful, right? Like, for those companies, we don't want to go through the whole balance sheet discussion and all that, but if you're newer, you'll have to look into that, or we'll cover it again sometime. But that is not a good sign for stocks, typically, that rates have screamed right back up again. Another thing that's not normally good is the dollar roaring back up for stocks. And this is why I'm saying this is such an interesting mix. This has obviously roared back up. Now, you could say, well, that's just a reflexive bounce. And it probably is. Could be. I would think, maybe, for sure. But it really roared back up. Dollar moving up, normally not good. And that's also normally not good for metals. XAU, not good typically. But notice, right after selling off, when the dollar sort of began to rally, it sort of shrugged that off into week's end to an extent. So that's an interesting development there. I think it was just due. It was a little overdone, a little stretched, a little overbought. I think they made the case it was probably due for something, and it just happened, I guess, after we went around when we were talking about it. But let's get back to IWM. So just keep that one in mind. I believe that IWM has that massive, big picture potential in sort of the bullish Goldilocks scenario. Everything works out wonderfully. That is very powerful, especially, right, if you start to see rates just roll back over hard, and things look really good. Suddenly there's just really bright skies over this country, etc., which I would welcome with the best welcome I could possibly drum up, but I just don't expect that, unfortunately. Anyway, here's GLD. I'm only going to cover these because of time. I'm only going to cover these in a basic way, but just remind yourself that, yes, this has had a really good run. Yes, it's definitely overbought at this point. It's very concerning. So I've been long this for quite a while. I would say a couple of years, and at the very least, maybe 3 years. I can't remember. I got lucky on the buys I made. But anyway, the point is, this thing's getting really toasty on a big picture basis, which is monthly here. Excuse me. And so the reason why that's a big deal is you could be in need of a little bit more of a pullback, but at the same time, right, it's really been super strong, and it has this cup and handle pattern that goes back for nearly, right, you could say it goes back 12 years, a dozen years in the making. So that is really nearly a dozen. That is really powerful. If this thing fully fires, right, this should really trade up. I mean, much higher. So it's got that little toasty at the moment thing, but that's the other kind of like big picture trade we've been covering for a long time, and it's worked out very well to this point. But let's just be smart, and I would roll up like a champ there. Let me give you a quick look at the market breadth. Oh, you know what? Before I do that, I wanted to cover the VIX because just to make the point that you don't normally see the VIX hover up in these areas without there being some sense that something's brewing, right? Normally, if you're in a normal kind of super bullishly acting market, you're down in the lower teens. And we are certainly right, not in the lower teens or 12 or something like that. So just keep that in mind. Let's just get a better chart. There you go. So you can see that again, I'm full disclosure, I am still long this. I plan to remain long it, and I plan to get even longer in different ways. There's some spreads that I looked at that I really like. I talked to Ryan. He's found a couple that were really interesting too. And so I'm prepared to lose money. Like my way of looking at the risk factor right now is that if my concerns, my spidey senses is off the mark, and I was concerned it was just bad read by me, spidey sense wise, then I'm prepared to lose money on that. I can live with that because nothing would make me happier than everything turns out like a dream scenario for everyone, right? The country's in a great situation, and so on and so forth. So I welcome that. I would gladly pay money out of my pocket to make that happen. So that's how I look at it. So that's why I'm hedging. One of the reasons, anyway. Hedge and hope to be dead wrong on your hedge, and then everything else tends to work out. That's something you'll hear Bill Johnson say, right? You trade basically, right? You trade the trade, but you hedge with your opinion. So whatever your opinion is, hedge based on that. And so that's my opinion, that the risk factors are very elevated in my mind over the balance of this year. And so it is what it is. So I don't want to belabor that, but I just wanted to cover that because that's another one of the big dogs that we cover. What I do want to note is that, let's get those sectors up here. So on a sector basis, and I'm just going to go through these in a basic way too. But look, you've all heard me that have been with us for a long time. I really like when XLE, XLF, and XTN are working better. And this just made, I believe, I think XLF just made a new high, a new all-time high potentially. XTN had a very good comeback week, and it's near highs that are key, that if it can break through, that's also a good sign. And I think, oil, black gold, was helped by the unfortunate developments with the storm, or these storms, and other factors. And I don't have the time to follow that as closely as I once did. I think it's an important sector that definitely bears closer observations, keeping tabs on, but I just don't have the time with what I have to do with all the ideas that come in the services and so on and so forth. But look, if that starts to break out and act better, that's a really good sign as well. XLK, the leader, we'd like to see lead. That started to work better and come back towards the highs. XLC, the communications, which is really XLK's partner, recently, these are acting well again, and that's good for the moment, right? Just a snapshot in time. So when you take the traditional things that you want to see, which I highlighted, combine the two former leaders, and they're now doing better, this is all really good. This is why, one of the reasons why I just can't find the big problems that some people are seeing in the markets. But that's not, you'll see why when I cover tabs, why I'm still very concerned, but just part of the reason why. But the defensive sectors like XLV and XLU, which have their own stories, by the way, so I don't want to just lump them into they are what they are and it's just vanilla, but they kind of have backed off recently. Now, we did have a little pop late in XLV, and maybe it's about to come back. That's defensive. XLP tends to be defensive, staples, consumer staples. And you've got this one that has traditionally been defensive. And they kind of all backed off a little bit, right? But the real estate did as well. and that's a little concerning, but it was probably due, right? So now we need to see in terms of the XLRE, can it break back up and come back up towards, right, a former support slash resistance area, or is this just sort of a hesitation and it's still on its way down? So I would just look to 43 as a concern area, and I would look to, if it gets up towards 44, as something to keep an eye on. If it breaks through there and you have another leg higher, that's excellent. If you don't, right, you fail there again, that could be the start of another leg lower, or at least a retest of this sort of cluster of lows in here. So be careful in there for now. It's obviously not a good trader at the moment because it's going against the market's trend, which I don't like to trade against. I'd rather trade something that is going with the market's trend, which I actually did have some financials recently in UOA Pro. I'd rather trade these ideally in SMH because when they go, they really go, and they tend to be leaders a lot of the time. But there's also trades that develop. We talked about on recent webinars and the special storm webinar that we did, right? How the EOA does a great job at grabbing your head, putting it on a swivel and having you turn and look at something that you might not normally focus on. I think that's one of the real benefits of UOA style trading. And we did have China names and we had energy names recently in the last several weeks where I wasn't necessarily, China's charts were not looking that great to me. And then suddenly the UOA started coming in, had to look at them. And then some of those moves were just crazy to the upside. And energy, they got on, right at the start of October, and they started moving that up. But to kind of round things out sector wise, even the former leaders that were really taking over, which I was crediting that mainly to XLB and XLI materials and industrials, they kind of were chilling out, and that's when we saw the XLC and XLK start to rejoin, right, the party. But now these are all trying to work their way up. So I don't want to sound like a perma bull, but I'm just trying to be objective, right? I really am, and I just continue to have a difficulties trying to find major behavioral problems in terms of the price action in a lot of these things that would signal sort of risk on, market feels good. But you will see why I'm concerned, like, again, very shortly. XLY, this one is a little bit of an outlier where you would think, well, if this is going to, that's another great sign. I wouldn't call this a catastrophe. It's still holding above the former high, but it did not really join the party and stay with the party last week. So you have to wonder, what's going on there. That this is now sort of struggling, but it's something minor. So yeah, if you start losing support, below, let's say, last week's low, and you're in a market that's doing well, and that would probably be near 194-ish, that's a little concerning. But if you take out, these other highs that are near 190, let's say just under 199, and you're right back in the mix. So let this work through its consolidation and show its first move to us. I don't think there's anything great to trade it at the current level. You have to wait one way or the other. So that's my quick little note on that. That is not all that spectacular. We can't not go a little bit deeper on the SMH because it is what it is in my mind, in terms of a market leader and space that's usually chock full of opportunities. So let's look at that. Again, we talked about it earlier, but it really should have potential to break out. It is not overbought. And that is one thing that I would look to. If that finally ignites, that could really help dramatically. So keep your eye on that. It should really be able to close this gap under these circumstances, assuming news neutrality. If it doesn't do that, and we've had a ton of paper, and mostly all bullish paper, and I keep waiting for NVIDIA to potentially take a run at this high, and I've mentioned it the last, I think, couple of weeks. You could sort of see an ascending triangle here too. And so you got to wonder, well, yeah, you did pop up and there was a trade in there and maybe there was some money made. I think we had some folks that did okay, But look, it's just not acting that great. Like, where's the old Nvidia, right, of of this type of run? Where's that at? It could still be looming. We don't know, but it's just not itself yet, or what we've come to expect from it. We haven't really had that sort of Nvidia, leads again stamp. So interesting. I don't know if it's over owned. That could certainly be the case. I really can't say, but that is maybe part of the problem where you have all this bullishness, and to this point, with all these call buyers and people that have, I should say, players that have seemingly been right, that are rolling and sticking with it. I still think it should try to make more of a move towards the highest highs. Remember, like with the diamonds and spies doing this, this thing is still several percent off the high. I've got a bullish idea in there. I'm waiting, but just like I'm sure a lot of our UOA pro traders are, but it's just not igniting. And that's very interesting. And it bears watching because of obvious reasons. So just keep that one in mind. The other thing I want to do, I'm going to just show that this is very interesting. I'm going to go through each of these quickly, but you can see, right? Could you make an argument that that looks poised to rally? You could. It needs to do a little work first. It's consolidating, so that could ignite, but that chart looks neutral to bullish to me, right? It doesn't look great. Probably a slightly bullish chart at the moment, right? You never know when something could perk up. There could be a pre-EPS run, so which would start relatively soon. Amazon looks a little bit on the bullish side, right? Where all it really needs to do is to try to continue a little bit more, and then it's at this sort of intermediate highest high. And then maybe it backs off from there. Maybe it puts in a base camp that's a little bit better than this base camp out here. And then it tries to run into the highest high as it tries to work its way towards the EPS release. Certainly could happen. But the interesting thing is that not all the rest of these names look all that great. Google, it's hanging above the 200 day. It's well off the highs. It could ignite at any time. It could also have a pre-EPS run, but it's really not looking that great. Meta was looking better, and then some UOA hit, and I thought they were going to extend this, but they didn't. So I have a bullish idea in there. I'm not sure if it expired, but the bottom line is, it's doing great technically, but it just didn't do much last week. So these are all, you can start to see that as a package, these are reluctant. Microsoft does not look good. It's below the 200 day. Now, it's been a buy for sure every time, but why is this acting this way? What's the problem here? These almost all naturally have the pre-EPS run potential. We already talked about Nvidia. It's not bad, but it's got an ascending triangle. Where's the oomph? Is it going to turn into a rising wedge? Just a little, everything here to me looks unimpressive, right? In terms of what we're accustomed to. It should look better in my mind, the way the market is acting overall. Netflix, how can you really say much about it? But look at the lack of follow through. It makes a new all-time high, I believe, and then just reverses down from there hard. Now it also has the earnings coming up. So I'll get Tesla on here too. So I really don't know what to say. Yeah, that is the highest high. And it is getting, you could see on a bigger picture basis how this is getting concerning, where you're on a monthly chart and you're overbought. Now, certainly you can get more overbought like you did back here. That's no doubt about it on a monthly chart, but you're overbought, and you have to start being concerned when things get this extended, especially in light of some of the other things I'm going to show shortly to wrap up the video. So final one we'll look at would be Tesla here, or Tesla. And, you can see this is obviously, right, not shaking out the highs and just got smacked, and not too far from your 200, your 150. Again, almost all these have the earnings looming. So I don't think they look great as a package. Like they're looming. I keep thinking they're going to break out, or there's the potential there for them to break out. I'm not even going to do the combination on them, but it's really not there. And then finally, come on, that's not what I wanted. Where's that? This should be, there it is. Here's the basic breadth chart that we should say, the breadth view that we look at each week. And again, let's put up the SPY. So it doesn't really matter, doesn't affect the indicators, but just so you can have that on there with the all-time high. And you can see that the advanced decline cumulative averages, they look good. The raw data looks good. The comparison lines of stocks above the 50, the 100, the 200, they're not at the highest highs, but they're pretty darn close. The cumulative volume index is really strong. The McClellan oscillator is now coming back, right? And you can see that the new high, new lows, and net new high, new low. No, sorry, normalized new high, new lows. This is all in favor of bulls and has been here, especially for a while. And even the McClellan summation, which was probably a little bit overdone in some ways way back in here, that also sort of pulled back. And but it seems like it flattened out. It's designed to be the slower to react. And usually, right, if this starts to pick up when this is flat, you're going to see this start rising again. So there really isn't anything really problematic at all from a basic risk market breadth view. And we already saw what the sectors look like. So this is why I'm having such a hard time not taking shots at this market technically. The rising wedge, I'll end on that here. But that is a concern, of course, but that is not in and of itself, unless you finally get the breakdown below it. You can't really worry about it. You can start to be concerned about it, but I wouldn't get into a worry mode unless it's threatening to do that. And it probably would take news to do that. So on that note, let me see if I can get the proper stuff up here for us, which should be right here. So let me come back to here. I just want to show you that look at where we are in terms of consumers who are uncertain about business conditions next year. I mean, this is just showing you how much the public is concerned. That's really, really dramatic. So it's massive uncertainty, right? Because of these elections. So remember, when you get closer to the election, uncertainty tends to cause problems for the market. And so you may not advance, right? So just keep that in mind. Another thing I would share is that this is 2025. The estimates for 2025 S&P earnings are finally back to where they're actually back to, I should say, they're now back to 2024 levels, right? So basically, these have fallen as they often do because of the constant lunacy of overly optimistic earnings. They always do that first, then they take them down enough so that they can beat 3/4 of the time so they have the win back. And this is how they manage this whole view, if you want to call it that. But you're back to when the SPX you were at, right, that would be SPY 510. So you're about 15% higher than that, roughly speaking, in SPY than when you last had these estimates. Here's where the 2024 estimates are now for the full year. They're back to where they were in April of 23. So, there's just all kinds of issues like this that have now cropped in. This is the sales growth. People are paying the highest ratio since when for price to sales right now. These are just things I want you to keep in mind about why I think you have to be concerned. This is an analog that Sven has come up with. Again, I wonder how all these folks have the time, but for what they do, but maybe they're not worried about active ideas all the time. For all I know, I like what some of the stuff these guys put out, but I don't really know what they do with their businesses or whatnot. But anyway, there's an analog for you. You could take a look at that one yourself. It is what it is. So he's comparing this to 2007 in this way. I don't think the situation is nearly the same because I don't think that I see the problems in lending. But again, I'm not as close to that situation as I was then either. So I can't really say too much. I want to share the put call, which is down here. So again, to me, this is more of a complacency thing at this point. That put call is that low. people are not that concerned. This is where the rolling complacency sort of, I think, gets established. You can see that you're even a little higher than you were. You're really very close to an extreme greed reading. You've got this timeline where you kind of have lingered up here, and that's usually not a good sign, where you just keep lingering and lingering nearby to these concerning levels. You can get worse, though, so it's not as though we can say, no, the top is in. Another factor besides that is that the AAII gang has really popped right back up again. So they're not at the highest levels of the year. You can see the 1 year rolling high is 52.9, but you could see that they're getting up there again. And it's hard to find, right? It's hard to find bears in terms of even at the average clip right now. And meanwhile, right, you have, I'm sorry, bears are, sorry, my bad. Bears are down here, which is a lot lower than their average clip. So very few people are bearish, according to this survey. Neutral is about the same, is what I meant to say. So sorry about that. My apologies. And then finally, this is small speculators, also known as retail. And I think you can see just how dramatic, when this is the 2 standard deviation range, you can see just how dramatic the so-called least informed, least educated group of investors within the market are feeling right now and betting. So my take on that is this is definitely contrarian. I am not somebody that dismisses the investing public. It's not that I think that people that are the investing public are so supposedly not intelligent. I just think in most cases it's just a lack of familiarity and people just more or less gambling. It's not, and you could say, well, that's dumb, and you could make that argument. I'm just saying that when you meet people that are interested in learning about the market, it's not an intelligence problem. It's really more of a lack of familiarity. And they all, I think anybody who's really wants to put the time in can learn and, get a lot more informed about what to do, when to do it. It's just that a lot of people don't want to take the time to learn things, and they just tend to speculate, which is why this is described as a speculator's position. So they speculate regardless, and this is, well, nearly off the charts, right? So just be careful as a result. And then finally, all I'm going to show here is, let me just pull this over for you all. Just want to show you that a lot of times Tuesday can be we call it turnaround Tuesday for a reason. And I'm not going to spend too much time on this, but I just wanted to encourage folks to I don't normally do plugs or, hey, let's show how great our services are and all that. But I hate to see people miss out on opportunities. And I think that if I'm dead wrong, I think there could be great opportunities, because when the market is running, you can get some really good EOA that not only tells you what's going to happen. So FXI, just to use China, let me get a shorter term chart here. FXI, come on. I just want the 3 month just to make this easier for everybody to see. But they started coming in, as I said, a few weeks ago. I'm just using this as a proxy for what happened in China. And you can see what happened. And I wasn't really loving anything I saw in the charts prior to the UOA. But when that hit and I saw the charts, it was a different story. And I was happy to get China names in, though I know they are very speculative and they're also prone to news developments and things like that. But then we also had, I think the week after that is when we had the XLE, again, oil sector UOA, right? Maybe a little bit later, and they started coming in for that. And really that was around the 1st of OC, which is, I guess, right around there. And it really wasn't looking that great to that point. And again, this is why I'm saying it puts your head on a swivel. But then this week, right, remember, we kind of came in thinking that the gang would probably try to rally from a base camp in a few key areas, and that could help the market overall. Might have helped out in SMH. But we started to see this paper in what was, again, essentially a sustained bullish environment. They came in for Carvana calls. This is where things are getting. They came in for Carvana and our guys spotted it with the stock near 184.38, and you can see it traded up to 194. So that's a pretty good week's work. SQ, it's a little bit more of a modest mover, but they came in on Tuesday for that one. And you can see that by the end of the week, I think they had gotten it up to about 71 ish. So again, it's a modest mover typically, but that's a nice little move for it. Upstart, you can see that one. Our guys found that near 42.80. We had seen it when it dipped, and we picked the 42.55 level out as a trigger. And that made nearly a $5 move, which is a 10% move for a low dollar stock. So you can see, right, that if you can get paper and you have good technical setups, these are not necessarily stocks I'm looking at first and foremost. This only ran up $1 there for our shop idea. That was a little disappointing, but I kind of knew when I put this one in, I was kind of thinking, okay, it's a little bit overdone, but maybe they could put a little bit more together, more than what we got. Maybe they still will, but it was an October 11 expiring idea. So that one's done. Only got up to 39.75 in SG. So again, another one that was already at its Bollinger, kind of getting up there to begin with. Not a lot of great movement from those two. But then MSTR, our guys spotted that near 198-ish. We put in a trade in there. You can see that when that expires next week. I think I put a couple different ideas in on that one. I can't recall, and I don't want to go through that because I know we're late on time, but there you go. I mean, when the market, my point of going through this day here is that when the market is rocking and rolling, which is when we had the turnaround Tuesday, kind of after a tricky Monday where they did their normal sort of misdirection for the week, and then they turned it around, that's why they call it turnaround Tuesday. It happens a lot. You can see the dash, they came in near 128.380. I decided that 124.98 should have been the real trigger level there for folks. That was on what day? We have to get back to the 8th, right, on that one. And then it closes there. Couldn't do anything the next day. They come in, and as they say, the rest is history. The gang gooses that up towards 131. So a nice little, let's say, $6-ish pop on that one in D-Dog. And then Dash, I don't know what this one did, but I'm just going to follow through on the whole day. So that was a decent little move, like a $5 or $6 move there. Finally performed at the end of the week. But I don't want to go through them all. There were a lot of bullish ideas, but this was just one day's worth of ideas. And this is what I'm trying to get to. If we get through this election and things sort of normalize, which I don't expect, but if they do, I do really think this market, it looks so good that it's really set up to roar into year's end. News issues to the side. So if you get that, that's been some of the very best trading we've had, where you get into where people who were wrong and people who are lagging feel as though they have to catch up. They've got to reverse their positions quickly, and it becomes fast and furious. So there could be, again, I think there could be a very strong finish to the year. I don't think it's going to happen, but if I'm wrong, I think the finish will be very strong. And I just wanted to show you that, when they come in and you have a good market, they usually are picking some really good runners, and you can get in on those. And so just keep that in mind. I know Citi probably did well. I would think the way XLF performed. I didn't even have a chance to look at any of these. So anyway, I was just going to wrap up on that note. I do hope that something I shared with you in the video helps you out this upcoming week or in some week in the future. Be careful out there, be disciplined, be nimble. I don't think you'll regret it. There's plenty of opportunities if you keep your powder dry. You don't give a lot of money back. You don't have to force trades on. You can always get back in, all the things we talk about all the time. And then then you go ahead and you just do your best, even if it's a tough market. But hopefully we'll get treated to a couple of good weeks before the election. Maybe they'll sort of pull things back a little bit before then. I don't expect that to be the case, though. Technically, I do think that this upcoming week looks more inclined to try to keep going, and then we have to see what happens. It's a tougher call. but I think there's probably a chance that we do get some kind of uh, news developments, just the way that things have been in modern times. So on that note, everyone stay safe in these markets and do the best you can. Have a great week, and thank you for tuning in. I'll see everybody next weekend.